Hello and welcome to Limassol Cyprus. Today, here we are at the Limassol Yacht Club at IFX Expo Week, when the whole FX industry is here on the island of Cyprus. And I'm joined by Natalia Hunik.
Hi, Andrew.
Hi, nice to see you.
Nice to see you.
Natalia is Global Head of Sales at Advanced Markets and Fortex in America.
That's right. Yes.
And we're going to talk about a very interesting subject that is actually at the top of many people's minds at the moment,
Right.
and that is the prime brokerage sector, because it's a burgeoning sector. Since the credit has been removed by a lot of banks, many retail non-bank participants are now going into the liquidity provision sector. Controversial.
Yes, it is. Very.
So yes, that's the thing. So what is a prime and what isn't a prime, and how do we actually differentiate and work out what the buzzwords are these days?
I think it's very hard, in today's realities to differentiate what is the real definition, and I think it's been evolving, and I've had seminars before about it. The definition itself it's not settled, right?
That's right.
Everyone understands what the Tier 1 PB is, or prime broker is, right? That's the bank, and they take care of the introducing operational efficiency, collateral efficiency, settling transactions, giving you access to credit lines at the major banks. That's the definition of Tier 1 PB. The definition of prime is a little bit fuzzy. It's not to me, because I know, coming from the institutional background, I know what that is. But I think lately it's become in FX world, it's become more, as you say, a buzzword.
It has.
Everyone is talking about it, right? So it's a catchy word. It is it stands for something. I think it stands in many people's mind when you speak about prime. From the marketing perspective, it's a good word because it has those associations with the prime brokerage, right? The Tier 1 prime brokerage. So it puts you, elevates you to like a little bit different level in the FX business. But I think many retail brokerages that are coming up with the prime brands or prime departments or prime product line, whatever you want to call that, I think it became a new definition of institutional department.
I agree with you. And see, my opinion is, from years worth of working in the technology sectors of these particular companies, is that a prime of prime really is a company that takes its liquidity, that has a liquidity relationship with the prime brokerage division of a bank.
That's right.
It's like one level lower. It's a non-bank entity that has a liquidity relationship with a Tier 1 bank.
That's right.
Anything other than that is an institutional liquidity feed.
Right.
But it's coming from them.
Yes.
That's how I see it.
Yes, I agree with you. That's the way I define the prime of prime. It's basically like a subprime, right?
Yes, pretty much.
Which means that the prime of prime has a relationship with the Tier 1 prime brokerage.
That's it.
Offers service as an intermediary to other market participants that either don't have access to the Tier 1 prime brokerage, or they don't want to go through the hassle of having one.
That's right.
Because it
is
scoring. Yes, it is extensive. The check-in and it only has become even more extensive recently because of the S&B and the requirements going up. So the entry barrier is very high to get the Tier 1 prime brokerage account. So it makes sense for a lot of people to go and get the service from prime of prime, because you actually have a lot of benefits apart from saving time on integration technology-wise, and also going through the credit check. You also gain benefits of higher leverage and much faster onboarding process, and technologies that are suited to if you're a retail broker, to your business. Can easily integrate with them, and the process is efficient and quick.
Yeah, I agree, and I think that the actual, as long as it is a prime of prime, a real one, then that makes perfect sense. And actually, it's becoming so almost impossible now. And certainly, if you are a new prime, which there are a lot of companies now, whether they're new companies or whether they are retail firms with a newly established prime division, they call it prime. It's like an institutional feed. Whether these have now come into the fray because of the lack of credit from banks, so brokers have got nowhere to go. So what they're doing is they're getting very good terms from what is actually a step down from the prime of prime, but it looks like a feed, like an institutional feed.
Yes.
And there's good terms because those companies are doing their own execution, so they don't have to go and lodge. They have to go and fight with Citibank. Citibank are going to tell you, okay, we've got 40% of the FX market, interbank FX market, but you as an OTC market are going to, I've got a probability of a 50% default rate. So you show us 150 million, we might consider it, but we might not. And if you're an existing customer and things don't look good risk management wise, they'll take the prime brokerage feed away. So it's given rise to all these other companies, non-bank companies.
Right. So speaking about just the reason why, I mean, it does this prime, that is not really prime of prime, but more an institutional division of the FX brokerage. I think it does have the right to exist because retail brokerages, build their businesses and they evolve in a larger enterprise, and they want to take a step up, because they want to differentiate the offerings between the retail and institutional, and they launch this prime division. I think it all makes sense, and they do have the right to exist because there is a need, right? There's clearly, if there's so many people trying to enter this niche, right, there's a need.
There is a need, yes.
And I think the need is for the smaller guys, because the market is still very attractive for new entrants, right? There are smaller brokerages that want to, come into FX. The entry barrier is low. You can take a white label. The cost-wise, it's all
$5,000.
Yes,
and that's
yes. So it's it's fairly easy to get established and to get liquidity from the prime of prime. Like, for example, advanced markets, it's it's not something that a very small company can go for, because there are certain requirements that they cannot meet.
Yes.
And so it makes sense that they would go to this institutional division of the retail brokerage and take advantage of cost advantage, the cost benefits.
As long as it's being operated properly.
Yes, of course. Well, they do take a lot of risks because so. But I guess the rewards are there as well in terms of money and saving time and perhaps other things that they see that it's a good fit, and the smaller brokerages see there are certain benefits with going with the institutional division of the retail brokerage, rather than trying to raise capital or find more money to go and open an account with the prime of prime. And perhaps they will down the line, but that's the starting point.
Well, that's interesting you should say that. Today at the IFX Expo here in Limassol, I witnessed about 3 different discussions with different industry professionals. One was on a discussion panel. The others were actually outside of the discussion panel who hadn't heard that, who all said the same thing. And what they said was, those brokerages that might start off by taking a liquidity feed like that, if they've got the right intentions, they're a small company, they will then up their license to a €730,000 MiFID market maker license, instead of just taking the feed from the other. Then they will put up the capital for that, once they've made enough revenues for it, and then start seeking other regulatory license in other regions. Once they've built up their book a little bit, they won't need to go down the route of looking for subprime feeds.
I think that's like elementary school, right?
Yeah, pretty much.
And if they're successful, they go to the middle school, and then they go to the high school.
It is. This is a dialogue that hasn't really taken place here at the IFX Expo until this year, because of all this proliferation of companies that are now called something prime, when their actually original business model was a retail business model. So it's kind of a new dialogue.
Right.
So that's an interesting one. And I guess those kinds of customers, once they have become more established, they are the sort of ones that would go towards a prime of prime.
Yes.
So in terms of entry requirements to get a prime of prime, not to actually go to the bank and put up 150 million, but to get a prime of prime, what does their credit need to look like nowadays?
Well, I mean, the client needs typically a professional prime of prime would look into the client. There's an extensive compliance check.
Yes.
making sure that
historical
everything.
Data and things like that, probably.
Yes, absolutely, and I think KYC is really big. I have people coming from the retail world. They don't understand how extensive the compliance check is at a real prime of prime or real brokerage that is checking everything that has to do with the company, and some of them have unrealistic expectations that I'm going to go live tomorrow. Well, that's typically not the case. It does take longer than that to pass the checks. And of course, there are deposit requirements.
Yes. Do they have to lodge capital? They have to lodge capital with the prime of prime, or have to do
mean margin?
To actually, to put a margin.
Yes, they of course it's much higher than it is at the retail brokerage. Absolutely. So they have to put down a certain capital, and also a prime of prime does not typically would also have requirements in terms of the trade and volume, or making sure that this is a decent business, and if they are offering an account, they are going to get business in return, as opposed to a lot of the retail brokerages would like to get just a good feed, but then will not send you any flow.
That's true.
Right? And so perhaps those institutional divisions, again, filling in that gap as well. Right?
Yes,
because
possibly.
There's a lot of small brokerages emerging, and everyone needs a good service, and they don't necessarily have big budgets.
No, indeed.
So I can see that, and it's not a bad thing in my opinion. It could be a good thing. It's, I think, as any business, as long as the business owner approaches it as a business, right, and thinks about the strategy and thinks about how they will grow the business and which markets they're going after, and doesn't treat it as a cash cow or like something that I establish, I collect the money, and then I'm done. You treat it as a business, and you really plan for the business to grow. You have the right attitude. You're willing to invest in the right thing. You'll graduate.
Yes.
And you'll get to a higher level, and you build your business to a larger company, and I think it's possible, and I've seen that happening with many brokerages.
I wonder if here in Cyprus there's a good now, because of the proliferation of non-bank institutional liquidity feeds now, whether there's enough market here in Cyprus to go for the prime. There's enough mature brokerages now that can take a prime of prime relationship and actually sustain it properly.
Yes, absolutely. There's plenty of established brokerages that are looking to work with, I think, credible counterparties. Moreover, I think all the changes that are coming from the regulator.
That's the thing. In 2 months' time, they're going to have to publish exactly where those trades went, according to what type of category. They're either a systematic internalizer, which is kind of MiFID terminology for a B-book company. Then you have the MTFs and OTFs, and then the regulated marketplace, which is exchange. So if you are signed up according to your business to be one of those, the reporting will have to be published. So it would be immediately apparent if you're not doing the right, if you are internalizing what you shouldn't be internalizing, or if you're registered as an actual brokerage that sends its trades to a liquidity provider and they're not being sent to the bank. That will be obvious very soon. So that's probably quite a good opportunity for prime of primes here, I would imagine.
Yes, absolutely. I didn't think about that. But this is a good point. Of course, if that's has been the marketing strategy and it's a part of the brand, right, that would do this, then absolutely, it will push more of them to probably go and really do what they preach, so to say. I agree. I agree that that's probably a kind of it's an opportunity, and for us, for advanced markets, I see a lot of opportunities, and I see, because of all these changes with the regulation, I see that there are a lot of brokerages are really doing their due diligence, which I encourage everyone to do. Of course, it's you always should know who you work with.
That's for sure.
And I've heard today, one particular brokerage is actually asking, which I've never had that question before, about the balance sheet.
Oh, is that right? About the prime of prime?
Yes. Usually everyone starts.
The way around, right?
Yes. Usually everyone starts. What's your conditions? What are your spreads? What is your commission?
So they're actually worried about passing their order flow across.
Absolutely, because now if you are sending customer funds to your counterparty, you want to make sure that counterparty is solvent and sound and has all appropriate tools in place. Yeah, this is the first time I've ever heard that.
Yes, and especially when you consider the recent events where we've seen an institutional firm go belly up and take down some of the brokerages with it. So it's actually interesting that now the retail brokers start to ask the questions that would normally be asked of them by a pilot.
Which is the right thing to do.
It is the right thing to do. I absolutely
I
agree with
agree.
you. Interesting. Very nice to see you again, Natalia.
Very nice to see you as well.
Natalia Hunik, Global Head of Sales at Advanced Markets and Vortex. Here we are on Limassol Yacht Club. Thank you for watching.
Thank
See
you.
you next time. Goodbye.